Good afternoon, family. This is another episode of Old Stock Tips. And before I begin this video, hit that like button, hit that subscribe button, hit that notification bell button, so when I drop the latest tips, you're good to go. All right, so I hope everyone enjoyed the weekend and Father's Day and the holiday that just took place. So this episode is going to be a little bit different. Since we had an extended weekend due to the holiday, I'm going to cover a stock that also deals with cryptocurrency. This stock in particular is an ETF. And to start off, I'm just going to give you a quick background knowledge. An ETF, or an exchange traded fund, are exactly as the name implies. Funds that trade on exchanges, generally tracking specific indexes. Pretty much when you invest in an ETF, you get a bundle of assets you can buy and sell during the market hours, potentially lowering your exposure while helping to diversify your portfolio. Okay? All right, so this ETF in particular that I'm going to talk about today, it's an upcoming company. You know, they just recently IPO'd. They're literally just getting up and running. But since this company could have some potential later on in the future, I'm just going to mention it. And also, I'm not telling you to buy, hold, or sell anything. I'm not a financial advisor. I'm just giving you my opinion and how I view the market through my eyes. Okay, so this ETF name is, or ticker symbol, NFTZ, also called Defiance Digital Revolution ETF. Its current price is sitting at $6.54. Its AMU, or asset under management, is at 6 million. They IPO'd in early December of 2021, which, like I said, it's a new and upcoming company that could have some potential in the future. Okay, NFTZ tracks a market cap weighted index of globally listed companies with relevant exposure to NFTs, which is non-fungible tokens, blockchain, and cryptocurrencies. So this is why I'm mentioning this ETF. I'm not sure if any of you know much about, non-fungible tokens, but pretty much non-fungible tokens are those things that are pretty much traded on things like OpenSea and all those different NFT platforms where people trade, things like even music, pictures, graphics. Non-fungible tokens are essentially not are things that cannot be duplicated. Okay, so this ETF actually covers a bunch of different sectors, along with things that deal with cryptocurrencies. They deal with the financial sector, companies that give out loans, and so forth. All right, so the first one of the first companies I'm going to mention that they cover is GameStop, which they cover. They bought up their portfolio covers 8.97% of GameStop, and everyone knows what GameStop is. GameStop sells a bunch of games. GameStop actually immersed themselves dealing with cryptocurrencies also. I'm not going to go into the full length of all the things that GameStop offers, but that's what they offer in their ETF portfolio. They also cover eBay, which is sitting at 5.88% in their portfolio. They cover DraftKings, which is 4.13% in their portfolio. They cover this company called CleanSpark, which is sitting at 3.45% in their portfolio. CleanSpark is a sustainable Bitcoin mining energy company. So they offer products to Bitcoin mining industry that helps with conserving of energy. They also cover this company, Block Inc., which is sitting at 4.30%. It's a global technology company which deals with things such as Cash App, Tidal, and Spiral. As you know, those are like ways of, buying or sending money. You already know things like Cash App. They also help with investing in the stock market and crypto. Also, in their portfolio, there's Silvergate Capital. This company deals with banking and loans. This is sitting at 4.43% in their portfolio. There's another company called Vinco Ventures, which is sitting at 5.06% in their portfolio. Another company is called Funco, which is sitting at 8.17% in their portfolio. I do have to mention that there is companies within their portfolio that are actually overseas listed companies also, or companies that are listed in foreign countries. And one other final company I do have to mention, it could be, a controversial company, depending on how people feel about it, but its ticker symbol is PLBY Group, which is Playboy. They're sitting at 3.78% within their portfolio. So these are just a few of their companies that they do cover, but these are the top 10%, the top 10 in their holdings, in their portfolio. So let me know what you think about this ETF, this new growing ETF. Do you think this would be a company to look into when it comes to something that offers a broad range of diversified assets to look into and coverage? ETFs gives shareholders exposure to different industries without too much, without having them being able to take on too much risk in just one particular company. This is something that some people choose to go into just so that they can have at least a little exposure in any other industry that they might want a little bit of exposure, but don't want too much exposure that would actually hurt their portfolio. So let me know what you think. Do you think this would actually be a good ETF to invest in or not? Drop your comments. Let me know. This is another episode of O Stock Tips. Peace.